Okay guys, in this trading example we're going to be covering another ES short setup, and this was due to a weak market environment. It's basically a continuation of the example video that we did prior to this one, video number 7, where we did an ES short at around 2800. We determined that there was plenty of room to the downside, potential profit to the downside, and over the next couple days that's exactly what happened. The market continued to pull back, and this just was a continuation of that move where we were able to hop back in to take the market lower. There's actually two opportunities in this example. We're really just going to focus on one, but I'll go over both anyways. And again, in this example, we had a weak market environment, meaning price was below the previous day low, below the previous close, and the open for the day session. That creates a weak market environment, increased likelihood that shorts will work. Again, there was lots of profit potential to the downside, and we talked about that in the previous video. And then a couple price levels to pay attention to is the Globex low, the previous close, and the previous day low, and I'll go over that in the screenshot itself. And if you need any help understanding what we're talking about and you have the course, go to sections 1 and 4 of the Derivatives Day Trader course, and you'll be able to brush up on anything that we talk about in this particular example. So let's get right into it. Okay. So in this example, the rationale for our setup, what we were looking for, what the market was telling us, was this. We were looking for basically price to continue to move down based on the weak market environment that we had seen, not only on this day, but in the past several sessions. You can see that just by looking at the charts. We have a big move down off this 2800 area that we had talked about previously. You can see that on the daily right in here. The market had been down a couple days in a row, so the opportunity for a short was there, and the likelihood that it would work was increased. So that's what we were looking for. Again, lots of profit potential to the downside. The previous close in the Globex low area was something that we paid attention to as well. You can see in this green box and this area in here, old support, this was the overnight lows, and previous day lows, had become new resistance. There's that old adage, old support becomes new resistance. So that was something we took into account as well, and added to the conviction of our trade. The area of interest that we were looking at for a short took out the regular trading hours for the US stock market low at the time and pushed prices lower. And the size of that drop from that price level showed that sellers were definitely there and there was a lack of buyers in that zone. And of course, like always, in all of our opportunities, it showed up on multiple time frames. This is really the third time frame as well. We had the 240-minute behind the matrix, but I can't see that at the moment. So we have the multiple time frames for the confluence, nice big drop out of there, weak market environment, and that's what created the short setup. So let's go through it chart by chart. So over here on the left-hand side of the screen, you're seeing the daily. And just like we saw in the previous video example, the markets had tagged and taken out this high right in here. So our previous high was taken out, and we had room basically all the way down back to the origin of this candle as profit potential. So we have a nice big area for a drop. A previous high was taken out, and in this current session, on this current candle, again, this is the daily, we were in a weak market environment. Prices were trading below previous close and the open for this candle, and we had broken through the previous day's low on top of breaking through the Globex low. So price had violated all of these levels, adding to the conviction that we still may see a move to the downside, right? And so if you take a look over here, let's go over to the 15-minute real quick on the right-hand side of the screen. I talked about having a couple opportunities in here, And the first one really was up here at the previous close, 27.72 3/4. This was the opening print for regular trading hours. Top of the first 15 minutes, bottom of the first 15 minutes worth of trading. Prices were rejected from this area up here. That's up in here. We moved lower and then finally got a retest back up into this area where prices saw an extension of that move. We dropped up out of here. Prices based for a little bit, actually retested right in there, and then broke through that first 15-minute low. You include the previous close into that weakness, a bounce back up into this area, knowing that we're in a weak market environment, so we can expect the market to move lower. This was a shorting opportunity right in here, right around this 27.72 to 75, right in there. So that was the first one, but that's not really what we were talking about. In this particular example, I wanted to cover this example, this short opportunity down here, where basically after that retest at the previous close and the bottom of the first 15, we had a much bigger move lower that actually ended up testing back down close to this origin of this move up in here, down in here, excuse me. We got pretty darn close to that. So once prices got rejected from this area, basically this set a low, reversed, got hammered, based, and then dropped even further. Once prices held down in here, we wanted a retracement back up into this area for a short. The size of the move out of this area is what caught our eye. The weak market environment, so we need to be looking for shorts. So we know what trading environment we're in, so we know what side of the trade that we need to be on. Not to say that getting long in a weak market environment isn't a good idea. It's just shorts have a higher probability of working in a weak market environment. Just whereas the opposite is true. If you're in a strong market environment, you want to be looking for longs and buying opportunities rather than your shorting opportunities, right? The other thing to take into consideration, the previous day low was 27.6250. 27.6250 was right in here, right in here. So we had a impulse move lower below that low, taking it out in a strong fashion. We got to close well below that level. Close was down here off that 15 minutes. Prices based and rallied back up to that point. So the thought process is once we got back above that low area and we have a defined zone or defined area that we could lean against, that would present a shorting opportunity, given that even on the daily, you can see it, we still have room to the downside. Still have room to the downside. So for a final push lower, if you will, this would be the spot that you could potentially see the market reverse. And that's exactly what ended up happening. Also, we looked at this old support becomes new resistance. Here was the overnight low, the previous day low, basically an area where prices popped up. So some buyers were there initially, but once prices started to move lower, the buyers evaporated and the sellers were in control and pushed it much lower. So once we got a retest back up into this area, along with the other factors that we just talked about, that presented the opportunity for a short for us. Okay? So that's really it in a nutshell for this example. It's basically a continuation or another example of the video that we did previous to this one where we shorted at around 2,800. This was just an extension of that move lower, another couple opportunities, if you will, to hop on board that train and take that thing lower. So we had multiple time frame confluence, big picture, we had a weak market environment. We had a retest and fail at the previous close. We had broken some lows and our old support becomes new resistance, finding this opportunity for a short. Really, there was 2 opportunities on this chart, but this is the one that we wanted to focus on. Okay, so that's it. Hopefully that was helpful for you guys. If you need to review the course itself, go back to sections 1 and 4, and if there's anything that you need cleared up, definitely take a look at that in the course so you have a real understanding of what we're looking for in these examples. And like all of our examples, we take into consideration different factors of what the market is telling us, where it could potentially go, and then adding them all up to increase the conviction of the trade. And then obviously we're going to position size differently given the different types of opportunities, but that's a little more advanced and really gets into the actual trading itself. Whereas in these video examples, I just wanted to show you what type of opportunities we're looking for on a daily basis. And these things happen on all markets every single day. Doesn't matter if you're trading stocks, options, futures, crypto, Forex, cash Forex. It all works the same way. So hopefully this was helpful, and we will see you on the next example.